Hello friends, welcome you all. I am Sundar from Symphonia Wealth. The topic what we are going to see today is markets have crossed 65,000 points and it's continuing to go up. So one question which never changes when it comes to investors' mind is why is the market going up? Or why is the market falling? Or why is the market not going anywhere? So the question never changes whether the market goes up or comes down. So this time the question is why is the market going up? So that is what we are going to see in the video. And more importantly, as market goes up, what as investors you should be doing? Should you be adding more or should you be booking your profits and things like that? So that's what we are going to see in the video. But first let's understand why is the market going up. So we've been repeatedly telling you and showing you a lot of data of why is the market and the economy is very strong. So the simple answer is the economy is doing very well, and I'm going to show you a lot of data to support that. The first and foremost is the current account deficit. So during the post-COVID period when the commodity prices started going up, right from crude to aluminum to a lot of other commodities, including the agri commodities, when it was going up in a huge way, naturally the current account deficit in India started slipping and it was a worrying point. And as we speak today, in the last about 6-8 months, the prices across the globe has actually fallen, which means it is good news for India. And on top of it, the Indian economy is growing, which means our current account deficit at a point was looking almost close to 3.7%, which is way too above. From there, it has actually fallen close to about 0.25% or so, which means we are in a lot more comfortable position when it comes to the current account deficit. Another very interesting and piece of information which keeps coming to us every month on month. One is the GST collection. We have spoken enough about it. The numbers every month seems to be going up, which clearly shows that the vibrancy of the economy. And the next very important thing is the growth of direct tax collection, which means the income tax which you and me pay. That's also going up very considerably, which also clearly shows the vibrancy of the market. The more important thing is the larger trend of the economy moving from the informal side to the formal side. Of course, we have a long way to go because even today, the number of people who are filing taxes just about 5-6%. But the good news is it used to be about 2-3%. From there, it has gone up and still a long way to go. So the larger trend is not the increase in tax collection. I think the larger trend is the economy becoming more formal in nature. Another very important piece of data which we need to keep track whether the economy is going up or not is the offtake of credit. The offtake of credit is the number of people who are willing to borrow. So when will businesses borrow? Business will borrow only when they see a customer confidence or the consumer confidence, and also the business feels that the demand is going to be relatively strong in the coming years. So from a low of about 6-7%, the credit growth has actually picked to about 15-16%, which is a very healthy news for the economy. Another very important thing which has happened in the last decade is, earlier the corporates were highly leveraged. What I mean by that is, most companies have actually borrowed money which were way beyond their limits, which means they were extremely debted. But over the last decade, with a lot of corrective actions which have been taken, our corporate debt has actually started falling in, and today most corporates are looking a lot more healthy than what they were 10 years before. From a high of about 62% of corporate debt towards GDP, that number has actually fallen to about 49%, which is a very good sign and which clearly shows the strength of the Indian corporates. Another very important trend which was emerging post-COVID was the China plus one factor, which most of us would have been hearing, that many countries are actually looking for an alternate when it comes to the supply chain. Because when a situation like this emerges and the countries actually face a lot of supply issues, which is what during COVID every country learned. Now that thing is actually playing out and India is emerging as one of the beneficiaries. One data point which actually is very evident is India's share of exports to US has actually started increasing. The share has actually increased from 1.8% to almost 2.8%. And especially post-COVID, this number has actually increased very steeply. Of course, 2.8% is still not a very large number, but the trend is very evident that India is actually one of the beneficiaries, and we are hearing very clearly from many of the other countries that India is one of the most dependable partners when it comes to trade. On the other side, if you look at the Chinese number has actually been falling when it comes to the US exports. Of course, not by a big margin, but at least there is a very clear trend from about 21%, they've actually come to about 18% or so. Which means more and more trend is emerging when it comes to the trade, and that book is also becoming bigger. So these are some few data points which clearly tells us that the economy of India is actually very, very strong. So now the next question is, what should you be doing when it comes to 65,000 at Sensex? Should you be booking profits, or should you be adding more, etc., etc.? I think this answer depends upon each individual and each individual's requirement. If you are in need of money, I think whether the markets are high or low, I think you can still book profits or at least pull out money. But if you're not really needing money, and if you think the Indian economy can grow and also you can wait longer, which means Sensex from 65,000 can be at about 2 lakh points or so in the next 10 years. Which means there is still a lot of growth for the Indian economy and the Sensex. So the chart what I have shown very clearly tells you how every time markets have gone up, people have actually panicked, and people who have stayed throughout have actually made money. When Sensex was at 5,000 points, if somebody told you that it will be at 65,000 points, nobody would have believed. And today, many of the investors might not believe that Sensex can actually hit a 2 lakh point, because if you don't understand how it has performed in the last few decades, it is very difficult for us to actually see the next 1-2 decades. So this number is definitely going to happen. It's just a question of time and not a question of whether will it happen or not. So believe in India and believe in the India growth story. Currently, as Indians, we need to participate in this journey so that you can actually create a lot of wealth. But to achieve that, you need to be highly patient, you need to be disciplined, focused, and more importantly, you should be thinking long term. At least look for the next 10 plus years so that your investment journey can be very good. So as we speak, let's enjoy the journey of Sensex, and the longer you stay, the journey is going to be even more better. Thank you for watching. Hope you enjoyed the video.